Welcome to Donchian Channel Forex Trading. Hi, this is Michael. We've changed the format of the daily review a bit. In Section 1, we'll discuss today's results. In Section 2, we'll present some of the background for our analysis. Before we get started, please take a moment to review our disclaimer. Please also remember that we don't recommend to buy or sell any financial instruments. Today is Tuesday, September 23rd, 2014. It's now 2:43 p.m. Pacific Standard Time. The U.S. equity markets all closed down again, and that's 2 days in a row. Will our long-awaited pullback occur in September? We shall see. The S&P closed down, and it closed below our short-term uptrend channel. A close below 1969 will make us short-term bearish. We do remain in the long-term uptrend channel. The resistance level is 2043. Support is at 1900 as seen by the green oval. The NASDAQ also closed down, but it wasn't as weak as the S&P. Price did, however, close below 40.39, but price remains in our medium-term uptrend channel. The next target is the 223% fib extension level at 41.48. Support is at 38.64. The US dollar closed unchanged as a doji. Price is continuing to consolidate just above 22.34. The next target is 22.99. Long-term support is at 21.81 as seen by the green oval. Here's the ADX analysis chart for Tuesday, September 23rd. Please compare this with the results of your analysis. From the ADX analysis and our strength calculator, we have the following currency strengths. There are 3 strong currencies and 3 weak currencies. The qualified pairs are the Aussie Canadian dollar, the pound Aussie, the Aussie US dollar, the CAD yen, the pound yen, and the US dollar yen. The New Zealand dollar pairs aren't shown because they would be complementary pairs to the Aussie dollar. Here's our trade summary chart for September. For open trades, our carryover trade from August on the Euro US dollar remains open, and we're short 2 micros. Target number 2 has been changed to 1.2031. The stop loss remains at 1.2992. As for new orders, no new orders were placed today. The Aussie US dollar looks good, but the stop loss is about 250 pips away. Let's now look at some price charts. First, we'll look at our open trade on the Euro US dollar. We're still short 2 micros. Target number 3 is 1.2031. Our stop loss is at 1.2992. Next, we'll look at the price charts for our 6 qualified pairs. Here's the Aussie Canadian dollar. We've recently broken through the bottom of this sideways channel, and we would be looking at a bearish trade. Second is the pound Aussie dollar. From this sideways channel, we've broken through the top, and we continue to go up. This would be a bullish trade. Third is the Aussie US dollar. Price had broken through the bottom of this sideways channel, and this price movement really shows the weakness of the Aussie dollar and the strength of the US dollar. It would be a bearish trade. Fourth is the Canadian dollar yen. From a breakout through the top of this sideways channel, we had a good upward movement, but now price is pulling back. Fifth is the pound yen. From this sideways channel, we had a strong bullish breakout. Presently, though, the price is about 200 pips away from the potential entry point. And last is the US dollar yen. From a sideways channel, we had a strong bullish breakout, but presently we see price consolidating. Thank you for watching my daily Forex trend review. If you'd like further details about our analysis in Section 1, please continue listening for Section 2. For more detail on the trading strategy, please go to DonchianTrader.com. There you can request a free trading guide. My podcasts are on iTunes. Recently posted is Treat Your Trading Like a Business, Trading Psychology. Please check them out and subscribe. The iTunes link is listed at the bottom of this page. Please continue listening for Section 2. In Section 2, we'll go into a little bit more detail behind our analysis. We'll be talking about 1, the time of day to do the daily review. 2, review of the 2 indexes. 3, background on the ADX indicator. 4, determining the strength of the 8 currencies. And 5, selecting the potential pairs to trade. The Forex trading week begins at 5 p.m. Eastern Standard Time on Sunday and ends at 5 p.m. Eastern Standard Time on Friday. So during the week, the Forex trading day ends at 5 p.m. Eastern Standard Time. We wait until after 5 p.m. to do our daily review. This is because the daily bar has closed on the price chart and the indicators are all up to date. The first things we'll look at in the daily review are 2 indexes. The first is on the S&P 500. We'll use the E-mini S&P 500 index futures. Here's the price chart. The S&P 500 is usually a good indicator of where all of the other markets are going. The second index we'll monitor is for the strength of the US dollar. We use the PowerShares US dollar index to do this. This is important because the dollar's strength can give us an indication of which direction the US dollar Forex pairs will move. The first step every day in reviewing the Forex market is to analyze the ADX indicator for each of the 28 Forex pairs that we monitor. The ADX indicator can be red or green. If the ADX is red, it means there isn't a trend, so we'll put a 0. If the ADX is green and the price is increasing, we'll put a +1. If the ADX is green and the price is decreasing, we'll put a -1. What we do is we take the results from the ADX analysis and we plug it into our strength analyzer. This strength analyzer will give us the strength for each of the 8 currencies. From the strength analyzer, we put the results in this table. Today on Sunday, we had 1 strong currency and 1 weak currency. We're only going to use strong currencies between +3 and +7, and weak currencies between -3 and -7. Our objective is to match the strongest currencies with the weakest currencies so that we can find the highest probability Forex pairs to trade. Today we had 1 potential pair to trade, and this is the Aussie US dollar. And this would be going long or buying the Forex pair. I hope this helps you to get a better understanding of what we were doing in Section 1.